Hello, everybody. I just went to broadcast, so I'm going to allow everybody a couple of minutes, probably a minute, minute and a half to just jump on into the webinar. We're a little bit early to allow everybody time to get logged in, so just bear with me for a few minutes, couple minutes. All right, I think we'll go ahead and get started. I'll do a little introduction. That'll give everybody a little bit more time to jump on and kind of go through our pandemic recovery series, just show you what we've been through, what we've got coming up. So anyways, welcome. My name is Amy Knight. I'm with Knight CPA Group here in Austin, Texas. We service home health, hospice, nursing home providers across the country. We're a full service accounting firm, from full service accounting, bookkeeping, bill pay, all the way through Medicare, Medicaid cost reporting, and income tax filings. So I've got online with me one of my associates, Courtney Buenatello. I don't say her name as well as she does. And she's going to help me, especially during the Q&A section, and also just be here because she is the one person on our staff. There's several of them, but she's really led the charge with all of this COVID financial assistance, whether it was PPP loan application, the forgiveness application, monitoring the spending, planning it out, and then also we've done a lot with the HHS provider relief funds and managing that and helping clients monitor it. So she's really been key in all of that here at the firm. So I've got her on standby to help me answer questions and whatever may come up, and also just make sure I am saying things correctly. Just a real quick disclaimer here, by attending this webinar, you are by no means engaging us to help you one-on-one. If you have a specific situation, you may need to get professional help to answer very specific questions. I'm going to try to be as thorough as I can today, but it's still going to apply to the general masses and maybe not be specific to your exact situation. So Healthcare Consult Link, myself, Knight CPA Group, and DLA Piper law firm came together to do this pandemic recovery series of webinars. And this just happens to be a bonus session because yesterday, SBA opened up to accept forgiveness applications from the banks. However, we haven't found any banks taking applications just yet, but it's coming. So we just want to help everybody be able to prepare that easy form. But prior to this, we had a series of 8 webinars every week on Thursdays at lunchtime to just address concerns and issues going on with the pandemic. And so these are the sessions we've had in the past. This link at top, and we will send out the link to, excuse me, basically, I will redirect you to the website that we have set up specifically for this series. On that page are all of the previously recorded webinars, along with the slides from, the handouts from each webinar. My slides for today's presentation, again, this was kind of spur of the moment. We're not ready. Charity with Healthcare Consult Link contacted me this morning. Are they ready? I'll put them up on the website so you could go download them ahead of time. And they're not, and I apologize, but I got some workarounds for you. So anyways, but it will go up after the webinar, and we'll send that out, so you will get the handouts and the recording of today's webinar, along with all the others that we've already had. So these were the first 4. We're right here in the middle today. And then this Thursday, we have session number 7. We've got 2 folks joining us from the Heart of Hospice to be on kind of a panel discussion with Heidi and Charity from Healthcare Consult Link to talk about the psychosocial impacts and also, how to rebuild your agency operations. And then next week is our final session in our series about optimizing external opportunities for your agency growth and expansion. So on that page is also where you can register for those upcoming webinars. So that's a little about us and what we've been doing. And here at our firm, we were fortunate enough to be able to divvy up our firm and say, okay, half the firm, you guys maintain our monthly workload, our monthly clients, deadlines, keep moving forward. And the other half of us are going to jump into all of this COVID financial relief that's been happening and help you guys, help guide you through it, and just try to put out as much education. We got to learn it ourselves and then put it out to you all. So that's what we've been doing. So as for today's webinar, what we're going to go over is really line by line the forgiveness EZ application. So it's SBA Form 3508 EZ. We're going to talk about what are the requirements, what are the eligibility requirements to allow you to use the EZ form, and then go by line by line the form, and then cover what are your covered your covered costs, whether they're payroll or non-payroll, and then quite a bit of discussion about the documentation. Certain documentation required with the application. A lot of documentation is required to be kept, but not necessarily submitted with the application. Then we will leave time at the end, at least 15 or 20 minutes for questions and answers. I do ask that you post any questions that you have in the Q&A panel of your Zoom toolbar. There's a box for Q&A. That helps us stay really organized. When it's in chat, it's a lot harder for us to manage it and know that we've answered it and things like that. Now, as for the chat panel, I did...
Amy, we have an issue.
Oh. Okay, somebody is saying that the phone line is not, but when they put in the PIN, it keeps saying they've joined the call, but I'm only a participant. Well, you're only going to be a participant. Courtney,
she's the only participant.
Okay, give me just an administrative second here. Courtney, let me go to Zoom real quick. Let me get out of this view. I can copy that in link, I think. I'm wondering if she's on the wrong link is what I'm wondering. So bear with me as I flip around. Let me log into Zoom and grab the registration link real quick and put it in chat. It's kind of hard to see over all of my presentation stuff. My account, webinars. Okay. Okay, Courtney, can you ask her to try, that was the registration link though. I don't know how to fix that if she's trying to dial in. And can you maybe look at the invitation, see if you can't resolve that while I continue on?
Yes.
Okay, all right. Carrying on, let me go back to presentation mode. And Courtney, can you verify you can see my screen the right way?
Yes, I can see your screen.
Okay, all right, thank you. Let me get my little laser pointer back out. Okay. So back to the overview. So post your Q&A there. And then I wanted to also say in the chat panel, at the very top, if you'll scroll to the top, I did post a link. This link will take you to the Treasury website, and the form that we're going to go over is there. So if you want to go to that website, we'll get to where the form is in just a moment, and you can follow along. I did do a lot of snippets, cut and paste, put into the presentation, so it should be very easy for you to follow along, even without going to that website and getting it. So I want to take some time to go through these eligibility requirements. There are basically three options, and you have to be able to answer yes to one of the three. You might be able to answer yes to more than one, but you got to be able to answer yes to one of the three options in order to be eligible to use the EZ form. I will say right up front, I want to go over this first, because if you don't qualify under one of these, then you don't qualify to use it, and I'm not going over the full-length webinar. I'm sorry, the full-length form, the application. So the full forgiveness application we are not going to discuss. That gets a lot more involved. I don't think I can do it in one setting, not to the detailed degree that I want to cover it. So we're just going over the EZ, and the reason for that is I feel like most providers in our viewing area qualify for easy. I think most home health, home care, PAS, Medicare, whether it's Medicare or provider services, hospice, nursing homes, I think most of you will fall into one of these three categories, most likely category 2 or 3. So let's go through them. Category 1, option 1, is fairly simple. You are either self-employed, an independent contractor, or a sole proprietor with no wages, so, like no employee wages, not self wages, no employee wages. So essentially you work on your own, and it depends on how you're structured as to which of these you are, but you really just filed the loan application with payroll for yourself. If that's you, you qualify, and that one's simple. This is where it starts getting a little different, and I'm trying to move I've got a box in my way, and I want to move it out of my way. Okay, you guys can't see it, sorry. Okay, so it starts getting a little complicated because these, on number 2, borrower did not reduce annual salary or hourly wages more than 25% during your covered period, and the second part, you did not reduce number of employees or average hours paid. So let me digest that and let me kind of explain it better. So the top part is you did not reduce your wages. This excludes anybody that's over $100,000. If you had some high income earners, $175,000 in wages, and you dropped them to $100,000, that $75,000 reduction, that doesn't even start counting on your 25%. You don't start counting 25% until you start dropping below 100,000. So any of those that you drop down to 100, kick them out, doesn't matter. In my experience so far, have had very few providers that had to reduce wages as what you are paid, either your salary or your hourly or per visit rate. So this is talking about, did you reduce the rate that they're paid? Okay, that's that top section. So a lot of my clients are going to be able to answer yes on that. But this is an and to complete option number 2. You've also got to be able to say, you did not reduce number of employees or average hours paid. So there's the catch. PAS services. You've been declined on a lot of services that you typically provide because your clients don't want you in their homes. So you've had to reduce the average paid hours, but you didn't reduce their pay rate, okay? Well, there's exceptions to this rule. The exceptions to this rule is that you get to ignore anybody that was a vacancy that you could not hire, you could not rehire somebody into that position for the same position. So for instance, you had attendants that you had to reduce their hours and then they won't come back because they're getting unemployment. Or you had to lay people off and now work is back up, they won't come back, and you can't rehire somebody similar with the same qualifications. This is very prevalent in the nursing homes with the aides. It's very prevalent in attendant services. And so that's kind of talking to you right there. And then you can also ignore reductions in the employer's hours if you offered, same thing, if you offered to restore it and the employee refused. So either you've tried to rehire to get people back in, or you've offered to restore their hours and they don't want them. So one of those, if that's the reason why you have a reduction in hours, you get to exclude it, okay? So like for us, I feel like our nursing homes are going to qualify under this second option. I'm going to go back just a tad bit because there's a comparison. Well, when you're doing a comparison, you have to know, well, what period am I comparing? You're comparing the average paid hours did not drop from January 1 through the end of the covered period. Okay, we'll get to your covered period in a little bit. You're probably very familiar with what your covered period is at this time. So that's kind of what you're looking at. But again, you've got these exceptions. If you try to restaff and they won't, you can't hire people and the existing ones won't come back, that's an exception. So moving on to number 3. Option number 3 is the first part is the same as option number 2. You did not reduce wages, and you were unable to operate at your same level of business activity as prior to COVID. And you cannot operate due to compliance requirements that have been established or guidance issued between, during COVID by HHS, CDC, or OSHA, or any other customer or work safety regulations related to COVID. So I think if you are a hospice and you were denied entry into an assisted living facility, a nursing facility, or patient home, I feel like that is, you qualify under here. If you're a PAS or a home care or home health service and you were denied entry into the patient's home, or you're a home health provider and your referral base, maybe you have a big doctor referral source that does a lot of elective surgeries, they were shut down. That's the ripple effect. Because they were shut down, elective surgeries, you didn't get the referrals, your business dropped. I feel like you qualify under this. Those are the examples I came up with. There could be more. So if you qualify under one of those 3 reasons, then you're eligible to file this easy form. Here's what that looks like on the application. And I like I said, I really want this to be as elementary as possible. My goal here is not to scare you into hiring somebody to do this for you. We are for hire. We're happy to help you. But that is not our purpose. We have a lot that we're working on with this. My purpose really is to arm those of you that want to do this yourself so that you can have the confidence to do it, and you can go do it. And also lean on your bank. A lot of the banks are very helpful in this area as well. But this is what it actually looks like on the application. So this is option number 1. Then you've got to break these 2. If you can answer yes to both of those, then you can answer yes to option 2. And then this is option 3, okay? Again, if you cannot answer yes to at least one of those, then you're not eligible to use this form. Here's the link, and when we do these, when we print these handouts, I'll make sure that link is active so that you click on it straight from the PDF, but this is the same link that I posted in the chat panel. And if you want to go there and download it, you can. Here's where you're actually going to land with, if you follow that link, you're going to go directly to the next page. But if you just go to treasury.gov, I do it all the time, this little red banner is going to get you right where you want to be, and then you can just scroll down, and this is the link directly, scroll down. This is what it looks like on the website. You're looking for these things right here. Here's the loan forgiveness application, the easy form, and then here are the instructions. And I will tell you, I have the instructions right here. So if I get asked questions that I need some technical terminology from, I've got it. We have sliced and diced it. We have multiple highlight colors, multiple paint colors. And I've also taken a lot of snippets to put in this presentation so you can see. But this really, my presentation or my slide deck is really just dissecting this step by step by step. So that's really what I'm covering. So here is the first section of the application, and the application, I'm not kidding you, is 1 page of info, and then 1 page of certifications, and then a 3rd page, which I honestly did not even fit in here, of voluntary information like race. When we get to the end, I'll tell you what's on it. I didn't even include it. It's voluntary. If you want to, give that information, you can. So let's go through this line by line. The first line asks for your SBA PPP loan number. We do know that many banks did not provide this. And so just know you may have to ask your bank for this. So we worked a lot with a bank called Vista Bank here in Texas. They were a small bank that opened up to and accepted non-customers applications. So we did probably 15 or more loan applications with them for various providers. So I know Courtney and I have worked with it. They did not provide this number, so we're going to have to go get it. But if your bank did, what you're going to be looking for is this document right here. It's called a one-pager, I think is what Courtney told me it was called. And this is just half of it, but your SBA loan is going to be noted right at the top. This is the SBA loan number. It's not the bank loan number. And that's why we're being very specific here. Here's the deal. The more accurate your application is when you submit it, especially if you're working with a big bank, you know, because they're all going to be automated. If you put your regular bank loan number in there, it could reject it. It could take weeks longer. Who knows what all it will might do to you. Real quick, just because I don't want to lose people, I am looking at the Q&A panel because we will answer questions at the end, but LLC, you do qualify because you're going to be on that first page, a self-employed. So LLC, you do qualify. LLC, it depends on how you're taxed when we get into the owner's compensation limits, but just because you're an LLC, you do still qualify as a, I don't want to flip back to it, sole proprietor, you're a self-employed individual, and it really depends on how, let me restate that. You don't qualify under the first option, but you may qualify in one of the other two options. So I was not very clear on that. That first option is really just for the sole proprietor, independent contractors, just applied for themselves. If you're an LLC and you just apply for yourself, you still qualify. You just may not qualify under that first one. It really depends on how you're taxed. If you're a single member LLC, then you're considered self-employed. If you're a C Corp, then you're going to be an owner employee. If you're an S Corp, you're an owner employee. It gets real technical. So I don't want to lose you guys just because you think you're an LLC and you don't qualify. Okay, jumping back on target. I just caught that out of the corner of my eye. So the lender PPP loan, again, that's going to be different than that SBA loan. This will be on your loan documents. This is a snippet from one of our loan documents. Again, I mentioned Vista Bank. You're going to have your loan number, and they all look very, very similar, I believe. I just have them kind of blurred out here. And you're going to have your loan principal amount. So your loan amount, you're going to need that number. And so that is on that first section of the application. It then asks for your PPP loan disbursement date. I want to be very clear on this. You want to look into your checking account that loan was deposited into, wherever it came from the bank directly to you. It would have went into some kind of bank account. That date that it hit that bank, that's your disbursement date. That date is very relevant because it defines your covered period and a couple of other, well, basically your covered period. It's not the date on the loan. It may be the same. It may be a day or two off. It may be 4 or 5 days off. It depends on the bank's internal processes. But it's also, and we had this happen to us, it is not the date. If you were to go online at the bank and look at your loan account and it says loan origination or whatever it might say, and it'll have a date there, that is not the date to go by. It might coincide with the date it was deposited in your bank, but it may not have. We have an instance where that was about 5 days difference. And again, it matters because that's when your cover period starts. You know, it matters if you had a payroll in between there. So it's not that date, it's the date that it actually hits your bank account, okay? It also asks for the number of employees at the time of loan application. This is relevant when it comes to the 500 employees or less count. That 500 employee or less qualification to even qualify for the program is a straight employee count. It's not an FTE count. So if you've got 200 full-time employees and 50 employees that work 10 hours a week, you still have 250 employees. So here they're looking at how many employees did you have when you filed the application for the loan, and then how many employees do you have now that you're filing the application for forgiveness. Okay, so those are those two fields. And I would do it based on that pay run on the date, the final date in which you're spending your money, the end of your covered period. Sorry, I drink a lot of water. And then, so next it's going to ask for your idle advance amount. This was that amount that you went straight to SBA and you did a very simple online application for an idle loan. And it depends on what stage you caught them in as to how simple it was. But this was that $1,000 per employee up to $10,000. If you got in real early, it was a straight $10,000. If you got in a couple weeks after it was first announced, it got changed to $1,000 per employee up to $10,000. And this was just a deposit into your bank account. There is no loan document. There's not much else about this. Now, you might have then gone ahead and applied for the idle loan, or you may not have. By requesting that advance, it said you were interested in a loan. They followed up several weeks later. Some of that's still just now going on. And that would be the second bullet, would be if you actually got an idle loan and you followed through with the SBA, those were up to, it was supposed to be up to $2 million, but they kind of cut it back to up to 150,000. There's a lot of, I think there's a class action lawsuit going on about that, but it's not the point here. So the first bullet point is the amount of advance that you got. And yes, it does affect your forgiveness. We'll get to that towards the end. But it also asks for your idle application number. So if you did apply for an idle loan, they want your application number. And I'll be honest, I'm not exactly sure why. If you got an idle loan, it does not affect your forgiveness or your PPP dollars, but they still want to know. So this is off at the top of the SBA idle loan, and it's almost like every page. So this one has your SBA loan on it. Again, this is for an idle loan, not the same as your SBA PPP loan number, but you want this application number. It's going to be in the top right-hand corner. If you don't have one, just leave it blank or mark NA. And then the next question asks for your payroll schedule. Kind of basic. Is it weekly? Is it bi-weekly, which is every other week? So like if you pay every other Friday or every other Wednesday, that's bi-weekly. Twice per month is also known as semi-monthly. So if you know it as semi-monthly, that's the same as twice per month. And then it could be monthly. And if it's other, you need to explain what it is. So mark that on there. Next, they're going to ask for, what is your covered period? I'm still frankly a little, I'm not sure how, but I'm going to tell you how we're going to approach this. If your loan was issued prior to June 5, before they did the big revision, you know, we started out thinking it was an 8-week time frame that you had to spend everything. If your loan was issued prior to that, it automatically converted you to a 24-week period unless you elected an 8-week period. I'll be honest, I know nobody that went back and elected an 8-week period. If your loan was issued after 6/5, you were automatically defaulted to a 24-week period. So let's just assume everybody has a 24-week period. I did mention the 8-week period on here as well, but I'm going to assume everybody's on a 24-week period. The reason I say I'm a little bit confused is, what is that end date? Because they've made it clear in their FAQs, the SBA, the Treasury, that you do not have to wait for the full 24 weeks to expire before you can apply for forgiveness. So then the question that comes up is, if your 24-week period started, let's say April 1st, and I did not do an example, so I don't have real numbers. Let's say that goes out to December 31st, whatever it is. And you're done spending in 13 weeks. is the end of your covered period that 13 weeks? I think by looking at this application, it's not. I think you need to define the full 168-day period, and it needs to be 168 days. So you go count 24 exact weeks. If your week started on a Thursday, it's going to end on a Wednesday, and you're going to count 24 Wednesdays after you got funded, and that's going to be your end date. You need to be very, very specific on this. Later, when it comes things to like your staffing and your payroll, and you're looking at your payroll reports for the covered period, but you're done spending in 13 weeks, I think your covered period for that argument, you're going to provide documentation for that period, not all the way out through the rest of the 9 weeks or 11 weeks that you didn't spend in. So that's a little gray. Banks are going to vary, and I'll just kind of coach you how we are going to do it for our clients and the people we're working with. Okay. Now, there is this alternative payroll covered period. I want to put it on here because it's on the application, and I want to give you the information and the knowledge, but I want to first say that I think this is a moot point and there's no purpose in using it at this point, because now that the time frame's opened up, unless you're struggling to spend that money even in a longer time frame, there just isn't a point in using this. To me, it just complicates matters. And what's funny is they said for administrative relief, like to make it easier administratively, we're going to give you this alternative method, but I don't find that makes it easier. The alternative method says, and it's only for payroll cost, but it says, let's say your loan funded on April 1st and your next pay period starts on April 5th. Then your covered period is going to start April 5th, and it's going to go for 8 weeks or 24 weeks, and it's going to cover that entire period. And basically what they're doing is they're saying, and I need to put a qualification in here, which I failed to include in my slides. Courtney, can you make a note that I need to add that before we print these off? I need to say that this only is allowed for weekly or biweekly payrolls. And I'm sorry, I did not put that in here. I don't see it. But at the end, instead of having to prorate, like if you were on an 8-week time frame and your covered period ended in the middle of a payroll and you had to prorate that payroll, this said if your period ends in the middle of payroll, you can just add that entire last payroll. I think that was the administrative burden they were trying to relieve, but again, to me, it's a moot point. Anyways, the point is your covered period under this alternative starts on the first day of your next pay period after funding date. Again, it's here for you to review. It's only allowable on payroll expenses and not on non-payroll. And in no event can it extend past December 31st. All of this is done by December 31st. There is no covered period that can extend past December 31st or an alternative payroll covered period. So again, that was that. I'm not really going to mention it much more there. If you look in the application, it'll say covered period or alternative payroll covered period. I'm not going to mention, I'm just going to say covered period. It also asks, did you have a loan amount in excess of $2 million? What we know is that anything over $2 million will be reviewed by SBA. Every single loan over $2 million will be reviewed. Now, I've seen articles that call that a full audit, but what I found from the SBA mentioned they will review all loans. We do not have any further guidance yet, but like Munchen I can't say his name right, comes out, he says they will all get a full audit. We do have a couple of those. They are fully prepared. We are documenting everything we do. They are fully prepared to be 100% audited on their expenditures, following the rules, did they qualify, necessity, all of those aspects. So that's the next question, and you would just mark it as a yes. So let me jump into my first polling question before we jump into like how to calculate some of the next things. So I'm going to launch this polling question for you guys, and it reads, how much was your PPP loan or loans? If you got multiple loans, you can choose multiple options. Were you in the $100 to $50,000 range? Were you at $50,000 to $150,000? Or are you $150,000 up to $2 million? I guess I should have put over $2 million. I'm sorry, I don't know why I didn't. So I'll give everybody a minute to answer that. I will say we've got 242 viewers online live with us, so that's quite a few for us. I think we had about 370 register. A lot of times people register knowing they'll get the recording automatically, and I'm fine with that. And while people are voting, just so you know, I do post all of our webinars, including all that we're doing in this joint series, are all posted on my YouTube channel, Night CPA Group. I encourage you to go subscribe. If you subscribe to YouTube and you allow the notifications on your phone, if you have the app on your phone, you'll get notified every time we put something out there. So it's a good way to stay up to date. All right, it looks like everybody that's going to vote has voted. So let me share these results with you. It looks like majority, 65%, 64% are over the $150,000 range. I'm sorry about you guys, over 2 million. I don't know why I didn't include that. I do know why, because I was doing this presentation, putting it together yesterday, late afternoon and this morning. So I got home a little after 8:30 last night. And I always say I have a 12-hour rule. I must be away from the office for 12 hours, including drive time. So I got home about 8:30, so I didn't leave the house till 8:30 this morning. All right, let's just keep going, jump back into it. So I should be back on our slides. So the next little section is, they make it so basic, and that's good because it's supposed to be easy, but they're going to ask you, line 1, ask for your payroll cost. Line 2, ask for your business mortgage interest payments. Line 3 is your business rent and lease payments, and line 4 is your business utility payments. So let's jump into, and then there's another section that then lets you calculate the potential forgiveness amount. And I did do a couple of very simple examples that I'll show you. And then so that's just kind of some math there. And then lastly, it shows you your forgiveness amount. What it does not calculate, and I don't understand why, it does not reduce the forgiveness by the idle advance. That is going to happen. I wish they'd have just put it on the form. So I'm going to point it out to you to make sure that you are aware of it so you know what to expect. So this is what it looks like, and this is my easy example. And we will dig into what each of these, how to calculate each of these line. Yes, I probably should have put these later on, but I wanted you to see a visual. And so actually probably what we'll do is go through it, and then I'll just jump back to this example after we discuss what each of these lines are. But it's just, what ours is, we're just working off of a PDF. It's a fillable PDF that's online. A lot of the banks are putting together their own portal and their own like online application so that it's automated. And I think that's part of the holdup. So before we jump into it, I can give you a little bit more history on what's going on with the banks right now and the whole forgiveness process. So the SBA, so you're going to apply with the bank through the bank that loaned you the money. The bank is going to take it, they're going to process it, they're going to render a decision. They're going to say, yes, we're going to forgive it, or yes, you qualify, no, you don't, you partially do, whatever. They're going to come up with a decision. Then they're going to submit it to the SBA. And they're going to go to the SBA and say, like for this example right here, it comes up, they've got $70,000 forgiveness. And they're going to say, hey, SBA, we are forgiving this loan $70,000. Please remit us the $70,000 that you owe me, the bank, that you owe the bank. Because remember, this was the bank's money that they lent you, not SBA's money. SBA is backing it up, and then SBA is going to forgive it, but it's still the bank's money. So the bank wants SBA to pay up. Well, that portal for the bank to submit it to the SBA to request the forgiveness just opened yesterday. So the SBA is ready to go. But the banks, some of them are dragging their feet intentionally, and it really just depends on how aggressive your bank is. But the banks are a couple of different things. They're either trying to work on technology on their end to accept applications in a more automated fashion to ease their burden, or they're not accepting applications at all because they're waiting on further guidance and they're waiting for the feds to quit changing stuff. And my concern about those banks, and not those banks, but people that are with those banks, because you don't have a choice now, you can't change banks, is that that may be sometime. The feds are still trying to work out this package number 4, and in it they're talking about some blanket forgiveness for loans under $150,000, meaning if your loan is under that $150,000, which was 24, 40% of you guys out there, you may get blanket waiveness. They may come in and say, you know what, you don't have to even apply for it. You're still going to want to keep all your documentation, keep yourself covered, but you don't even have to apply for it. We're going to automatically forgive it all. Even if you had to reduce staff and reduce wages, that's what they're talking about. So some banks aren't doing anything till the feds quit changing the rules, is what they've said. And then like Vista Bank, the bank we're working with, the way they're approaching it, I like. They're saying, hey, we're getting our technology dialed in. We will be reaching out very soon with a specific code for you to go in and start your application or something like that. But they also put not a warning, but it told everybody, you know, we are really trying to get all loans under 150,000 automatically forgiven. Now, think of it from the banker's perspective. The statistic is that it's like 80% of the loans issued are under $150,000, but that only made up like 26% of the dollars issued out. So you got a whole bunch of little loans, but it's going to take just as much work. Honestly, I'm telling you from my, professional experience, it might take more time to process some of the forgiveness applications for the small loans because they tend to do payroll themselves, not have as solid of records, try to be doing it themselves, so maybe it's not all put together as smooth as some of the larger agencies and larger companies. They're going to hire somebody to put it together. It's going to be a nice clean package, and all that. They're going to have third-party payroll reports, which you're going to see referenced later. If you've got a third-party payroll processor, your documentation is a lot easier. And so that from the banker's perspective, they want all of those under 150 waived because they don't want to have to process that massive amount of applications. So you might have some banks that will accept your application if it's over 150,000, but if it's under, they may not even accept those yet. They may make you keep waiting. So what we're telling everybody right now is check with your bank first. We're ready to go. Trust me, we're ready to get it done and over with and get back to somewhat normal accounting, although there's no light at the end of the tunnel, it appears. But anyways, that's a little background on kind of where the banks are coming from and how they're handling things. So again, here's a different example of where they do get limited out. We'll come back to that, okay? I feel like I am way out of order here, guys. I apologize. Yeah, okay, this is just what the rest of the application looks like. So I think what I wanted to show was, in the beginning, I showed the demographic part. Then this is the rest of page 1, and that's just a different example. This is page 2. Here's the first set of certifications. Here's the next set of certifications, and the final set of certifications. So before we dig into, and that's it. That's your loan application. I think that's what I was trying to show you. Before we dig into how to calculate the payroll cost and the non-payroll costs, let's just go through these certifications real quick. I honestly just did not want to retype everything. So you have to certify basically that you understood the rules and you followed the rules. And that's what each of these are. You're going to be held, you didn't reduce It was used for payroll costs, which we're going to get into. It includes payroll costs of at least 60% of the forgiveness amount. If less than 60% of the total amount that you're asking for forgiveness was on payroll, then your forgiveness is going to get reduced by that amount. I'll show you that in one of those examples. It's got some owner's compensation, and this one's not owner's comp. This is individual employees compensation. I'm sorry, this one is owner's compensation. Is capped, and you followed that. And then this is the individual, per individual is also capped. I do have more details on that in later slides when we're calculating payroll costs, so we'll get to that. You know that you cannot use it for unauthorized purposes. You did not reduce your salaries or hourly wages more than 25%. The borrower has accurately verified all of your payments are verified, like it's all legit. You've submitted to the lender all documentation that's been requested. The information provided is accurate, and if not, there are all these fancy fines that you can get hit with. The tax documents that you supplied are legit and what were actually filed with the IRS. And that you understand that the SBA may request additional information. And then you did not reduce the number of employees or the paid average paid hours, except for those exceptions, which are right there. Or you were unable. So you don't have to certify all of these. On this, you have to initial at least one of these. So just got to kind of read through that closely. All right. So let's go into your covered cost and let me check time. Okay, yeah. So compensation, you know, we've been through this a lot. I've done a lot of webinars on it. If you need more information on this, go back to probably there's one that's a PPP deep dive in July. That was probably a good one to watch. And again, they're on YouTube, and it goes through this a lot more detailed. Nothing's changed since then. So compensation, you're looking at your gross wages. We still get asked this question a lot. Gross wages, not your net wages. You're looking at your gross wages. You do want to reduce those gross wages. Gross wages does not include like mileage reimbursement, cell phone reimbursement, tablet reimbursement, marketing supply, any kind of expense reimbursements do not get included. Auto allowance, that's not gross wages. So make sure you're only including gross wages. That does include bonuses, hazard pay, anything like that. It also includes paid leave, any kind of, PTO, vacation, sick time. It does not include any of that special paid leave, the emergency paid sick leave that was under the FFCRA that you then got a tax credit for. If you got a tax credit for it, you don't get to include it. It does not include wages in excess of $100,000 annualized per employee. So these are for employees. An 8-week maximum, an 8-week period maximum per employee is $15,385. If you go out to the full 24 weeks, that number goes up to $46,154. If you're using less than 24 weeks, then what you've really got to do is take the weekly max and multiply it by the number of weeks that you spend, that you use the loan. So if it takes you 12 weeks, then it's 1923 times 12, okay? The bank can kind of help you with that, and even though to me it's well defined, I think the banks are each going to have their own interpretation of how to apply this. I mean, they may come in and say, hey, it says a max of 46,154, and they may accept it or go down the road. We don't know yet. It must be paid to employees during the covered period who were employed during the covered period. So you can't go back and pay people that worked for you last year and that you felt like you owed them a bonus or something. That can't work. And it must be, the employee must have principal residence within the US. Employee benefits. This is going to be the total amount paid by the borrower for either employer contributions to health insurance or employer contributions to employee retirement plans, or the employer contribution to state and local taxes. Again, these are all employer expenses. So the first one is going to be whatever you as the employer pays for the health insurance. We have taken the stance that that's going to include medical, dental, vision. Life gets a little iffy, short-term disability, disability gets a little iffy. With it's going to be up to you. You can include it or just extend it for regular payroll a little bit longer. That's going to be kind of up to you. Here's the thing. If you include these items, you've got to justify them. So you're going to have to produce all the documentation, the payment, proof of payment, the invoices, all that has to go with it. Or is it a minimum enough expense that if you just run one more payroll and pay wages with your PPP loan, then all you're doing is producing payroll reports, which in our opinion is easier. That's up to you. They're totally allowed. Employer contributions to retirement plans, this is going to exclude the pre-tax or post-tax on both of this. This excludes the employee contribution. This is only the employer match, the employer side of it, okay? And then the state or local taxes, these are taxes assessed on employee wages paid by the employer. So that's going to be like state unemployment. I know that some states have a lot of local taxes. Thank God in Texas we don't. We only have state unemployment tax. Anyways, owner employees. So owner employees, self-employed, or general partners. This is where being an LLC gets very confusing because you could be an LLC and be any one of these. LLCs basically get to choose how it depends. LLC is either single member, meaning they only have one owner. If that's the case and they don't make any special elections, then their LLC is disregarded by the IRS, and therefore they are a self-employed individual. Okay. Well, if there are two or more members, they make an election. Are they going to be taxed as a partnership, or are they going to be taxed as an S corp or a C corp? Corporations, the owners of corporations or any entity taxed as a corporation are owner employees. So if you're an LLC, taxed as an S, taxed as a C corp, or you're an S corp, or you're a C corp, the owners are owner employees. If you're taxed as a partnership, then you are a general partner. So you're going to fall into one of those categories, okay? And they each have a little bit different rules. So you've really got to know what you are. 8-week period is capped at, this is compensation for the owners. Your compensation is going to be capped at 852, so 8 weeks out of 52 weeks of your 2019 compensation up to that 15,835, which is 100,000 annualized, okay? That's if you're at an 8-week period. If you're going to a 24-week period, you are still going to be capped, but you're going to be capped at a 2.5 month equivalent of your applicable 2019 compensation, or 20,833, which is the 2.5 months equivalent of $100,000 annual salary, whichever is lower. So basically, when you applied for the loan, you were able to count 2.5 months worth of payroll, but you were capped at 100,000 for each person that you counted, including you as the owner. So when you applied for the loan, the most you were able to include in the loan amount for you as an owner was $20,833. So on forgiveness, the most you're going to get to include on forgiveness is $20,833. Now, that's the most. If you did not pay yourself in the prior year in 2019, wages like you're supposed to, or distributions, it all depends on how you're set up. If you did not pay yourself properly, then you're limited to what your 2019 cap was. Or if your company just didn't do well, or whatever, that your net income wasn't there, whatever the case is, you're limited to 100,000 or 2019 compensation. Okay. This is one of those reasons when we go talking about best practices, we're going to remember why it's always important to pay yourself first and pay yourself properly and pay yourself a reasonable salary as long as the company can afford it. Okay, those are for discussion for a different time. But those people that didn't follow those rules, that kind of bit them in the butt. And honest little side note, I have a CPA buddy, and her and her husband run an accounting firm, and they did not pay themselves last year. And the way they have it structured, it's all, it's all about tax advantages, but sometimes that bites you in the butt. And so she's kind of got screwed on this deal. She's a little upset about it, but she has fixed the way she pays herself. I will say that. Lastly, if you lose, again, this is the same thing. If you use less than 24 weeks for more than the 8, we are told it's going to be a prorated amount, but again, it's not going to let you prorate it more than the $20,833. So we'll see how that all plays out. Eligible non-payroll costs. So this is going to be your mortgage interest, your rent, lease, and utilities. So business mortgage interest, pretty plain and simple. It includes your payments paid, and it's got to be paid or incurred during the cover period. It's going to be on real property or personal property. So that could be an office building mortgage, or it could be if you have a mortgage on any kind of personal property is tangible: copiers, desk, furniture, those kind of things. It does not include prepayments. You can't just go prepay it all. Okay, so it's just, now if you were behind on payments and you paid it during the cover period, I think that counts. It's just not going to let you prepay anything. If it was incurred during the covered period, but you paid it like right after, it counts because it was incurred. Business rent or lease payments, basically essentially the same thing. The lease does have to be in effect, in force prior to 2/15, but this could be even like equipment leases, car leases, any kind of rent or equipment or vehicle lease. Now, I'm going to throw a little bit of caution on vehicle lease. If the vehicle is leased in your personal name, I don't think the bank will accept that. Again, a lot of people we're talking to are not even going to deal with these expenses. They're just going to stretch it out over payroll and call it good. But I still want to cover this because it's completely legit. And again, the payments have to be paid for and incurred during the period. And then lastly is your business utility payments. Same thing. And the utilities had to be for services which began before 2/15. So you can't go turn on a new high speed internet package and you can't go from dial-up to fiber and get that forgiven. Now, utilities includes electricity, gas, water, telephone, trash, sewage, transportation, internet. Transportation in this definition does not mean mileage. That's our interpretation. We're going a little bit conservative. In the northeastern part of the country, there is basically, it's almost like a transportation tax, if you will, but everybody pays into it to pay for public transportation. So I don't know if it comes on the water bill or how they get it, or maybe the electric bill or something like that. That's what they're referring to there. But it does include telephone and internet, so beware of that. All of the above are optional, and you do not have to report these payments if you do not want to include them in your forgiveness calculation. You may be saying, oh, this is easy, I've got that. But when we get to the documentation, you might say, oh yeah, now I understand. Maybe I don't want to pull all that documentation together. So let me launch my next polling question. And let's see. Do you plan to, so that being said, do you plan to include non-payroll costs in your forgiveness application? Simple yes, no, or you have not decided, and you're able to change your mind after, I mean, the documentation is not that bad, don't get me wrong. I just think it will definitely increase the workload. But if you've been pulling it together all this time, it's no big deal. Okay, several people still voting. Let me wait for it to slow down. And I'm hoping We got Cheryl dialed in. I don't know. There's a lot of chat in there. All right, let me share this with everybody. I'm going to end it. It looks like most people, but there's still quite a few that are not going to include them, but it looks like most people do plan on including them, and there's still a fair amount undecided on that. So again, doesn't matter. It's absolutely legit, and especially, I'm assuming that I'm talking mostly to home health, hospice, nursing home, assisted living, which is very labor intensive if you've got enough payroll to cover this. But we're working with a couple like friends of friends that are in farming or construction, and their like lease payments, equipment leases are very a big chunk of their cost. We totally get that. So what do you have to have for documentation? I've got two sections of documentation here. Actually, let me back up again. Like I said, I did put these in a bad order. Let me go back to that example. So we went through the cost. So this line 1, let me go to my first example. Line 1 is going to be your total payroll cost. Again, that's wages, benefits, and state and local taxes. Okay, that's the 3 in a nutshell. But you're going to calculate that all up. There may be some supporting schedules, but there are none with this actual form, and you could always go to the detailed form if you wanted to, but there are no, the instructions tell you how to calculate, but there's no like supporting schedules that I'm aware of that you have to fill in to show those individually. You're going to have to provide the documentation, but you're going to come up with a total number, put it right here on line number 1. In my example here, we're going with the example where they got a PPP loan of $100,000. In both examples, they've only spent $70,000 of it on, for whatever reason. Let's say they period ended, right? Let's say their 24 weeks is up and they ended, which is highly unlikely. But they're only going to spend $70,000. I'm going to show you the difference on what this 60% rule, how that affects you. So this person had no business mortgage interest, but they did have rent and lease payments, and they didn't include any utilities, right? Let's say it's included with the lease payment. So they got $50,000 of payroll cost, and they've got $20,000 of rent and lease, so they spent $70,000. So down here, when you put in, here's the, that you total up what was spent. So line 5 essentially is total amount spent on eligible expenses. Line 6 is what was your total loan amount, and line 7 is what was the 60% requirement. And so what it states is, it says you need to divide your payroll, what was spent on payroll, divided by 60%, and that's the most that you can have forgiven because of what you spent. 60% had to be spent on payroll. Well, in this case, out of 70,000, 50,000 was spent on payroll, which is 71%. So it's cool. Well, to get your forgiveness amount, you take the lower of these 3. The math is done for you, just follow the form. So they spent 70,000, they get 70,000 forgiven. However, on the next example, here they only spent 40,000 on payroll and they spent 30,000 on rent and lease. So again, they still spent a total of 70. They still had a total loan of 100. However, their 60% requirement required them to spend 66,667 on payroll, and they didn't. So they're going to be limited. Out of the 70,000 they spent, they're going to get limited to only 66,667 as being forgiven, because that's the lower of those 3 numbers. So that's how that works. Again, what is not shown here, there really needs to be a line 9. How much was your idle advance? Line 10, total forgiven is forgiveness amount minus your idle advance equals total amount forgiven. So you're going to have to pay back that idle advance is what it boils down to. Okay, so that's how you work through that. And I mean, it really can't be any easier than that. So then, I'm sorry for being out of order. Let me go to documentation. There's 2 groups of documentation. The first group that we're going to go over is the documentation that's going to be required to be submitted with your application. Here's what they're requiring. The second group is to be kept and maintained for 6 years. You've got to have it, and I beg you to put it together now and put it in a file, digital or otherwise, so that if somebody comes knocking, it's all put together and where you can easily access it. Excuse me, I'm sorry. Documentation for payroll costs. What they want to see is they want to see either bank statements or third-party payroll service provider reports documenting amounts paid as compensation to employees. This is where I said it's going to be super advantageous to those of you that have a third-party payroll company. If you got third-party payroll, they're going to take those payroll journals and accept them without a whole bunch of bank statements to go with them. If you did payroll in QuickBooks, I don't know if they're going to accept, I don't know how strict they're going to be on this. I would certainly start with that, print your payroll reports out of QuickBooks, but you might have to supplement them with some bank statements showing that those were paid. So that's kind of how so that's what you got to have, proof of payments to employees. Then you're going to have your tax forms. So basically you're going to have your 941 for, and you're going to have to do 941 or something relevant that covers the entire period. So let's say your spending went into third quarter and you're ready to apply right now. Well, third quarter reports aren't going to be ready. For a lot of people, they're not going to be ready till the end of October. I'm sure the bank will take some kind of substitute for what was paid in third quarter, but they're going to be looking for these tax reports to be submitted. So I don't know what that's going to look like just yet. If the tax forms are filed, they definitely want those. If they're not, then they'll take a third-party payroll service provider, like here's what it's going to look like. We'll have to see what that looks like. Then they're going to want to see payment receipts, canceled checks, or account statements showing the employer contributions to the health insurance and the retirement plans. Now, like for me, when I pay my 401k contribution, I don't get a statement. I don't really get anything. I've got our little work paper, but I can show it auto drafted out of my account. So I think that would be good. Just a snippet of your bank statement or your bank statement showing where it was auto drafted, highlighted. Same for health insurance. Now health insurance, you usually get a bill to go with that. I would definitely supply the actual invoice. If you checked only the second box on page 1, the average FTE, I did not document this well. This is what it says. If you checked only the second box on page 1, which is where the questions are, the average FTE count on January 1 and again at the end of the cover period will need to be included, documentation for that. So if you're saying that we did not here, let me look at my thing right here, second box. Okay, yeah, if you're saying you did not reduce FTE except for those 2 exceptions, then they're going to want you to prove it. So you're going to do an FTE calculation for January 1st and then the end of your covered period. This is one of those gray areas where the end of your covered period becomes questionable, because let's say you don't need to go all the way to 24 weeks and you stop spending and July 15th was your last payroll, that you used any of those PPP funds to cover that payroll, I would use that payroll to calculate that ending FTE count, okay? Documentation for non-payroll cost. They're going to want to see, and this is where you start questioning, is it worth it or should I just run a little bit more payroll? They want to see a copy of your amortization schedule and canceled checks or receipts to verify payments, or a statement from your lender from February through 1 month after the covered period. So if you have a mortgage that you can go online and print a statement, good enough. Run it from February through the month after. They want to see consistency there. Same thing with your rent or lease payments. They want to see either an account statement or your canceled checks, bank statements. And again, they're going from February through the end of the 1 month after the cover period. So 1 month after your spending. But they also want to see the lease agreement or, well, actually it says lease agreement and receipts or a lease or account statement. I still think they're going to ask for your lease agreement. That's my 2 cents. That's not how it reads, and I did copy these verbatim. Lastly are the business utility payments. They're going to want copies of invoices from February through 1 month after. No, this one they just said through the covered period, and they want those either canceled checks or proof of payment, or the account statements. Again, if it's a online account, electricity account, you can log in and print a statement. So if you've got all that online, it may not be that big of a deal, and this may not be a big deal to you, but a lot of people we've talked to have said, you know what, we're just not even going to mess with that. I said, okay, cool. Because let me flip back just a moment on these payroll reports. So we've been working hand in hand with clients, monitoring every single payroll. So we have a payroll journal specifically documented what are the PPP allowable expenses on each and every payroll. At the end of it, we are going to run one payroll journal for the entire period to accumulate all of it. You do not want to make the bank go through 8, 10, 12 payroll journals and add it all up and sort through all of that for you. You really want to run one consolidated report to show the whole time frame in one picture. And then that's going to be way better on your calculations. So then this other set of documentation is what needs to be maintained. Now I would say on site. It doesn't have to be on site, but you want to keep in your possession these records in case they want to come review or audit or ask further questions. And so it's basically everything you can think of, but specifically list documentations that the hours, the wages and salaries were not reduced by more than 25%. So payroll journals are sufficient there. Documentation that, now this one is big. If you want to keep all the documentation on all the employee job offers and the refusal where they refuse to come back, refusals to accept restoration in hours, like you try to restore their hours, firings, if you fired somebody and what the cause was, voluntary resignation, written requests to reduce workloads because they needed to stay home. All of this, HR, you want to keep that really documented. Documentation that you did not reduce number of employees or average hours, other than those exceptions. So all of that documentation. Documentation that you were unable to operate at full capacity. So let's say I have one client in particular, they do a lot of outpatient orthopedic rehab, okay? And so their business really dropped when they left elective surgeries went off. Well, how do you document that? Well, I would document, I would write a document. I would write up a narrative that says, on this date, the state of Oklahoma shut down elective procedures, and therefore, as a result, our referrals dropped off significantly. We usually average this many referrals, which equates to this much in revenue per month. That dropped off. I would just document that so that you can show, or we normally are servicing 10,000 visits a month and we only did 3,000 visits for these months. Just document it some way. You've got systems to do that, but do it now. Don't do it 4 years from now when somebody's asking and you're trying to remember. Like, oh, I know we were legit, but I just don't remember exactly how we worked that all out. And I'm sorry about all this. I suffer from allergies. This last one is, all records pertaining to the loan, the documents that were submitted when you applied for the loan application, all supporting evidence of the certifications that you made, stating that it was necessary, that it was a necessity that you get the loan, that you were eligible to get the loan, and then all the documentation, save everything that you're putting together for the forgiveness application. And then everything that shows that you're in compliance with all of the requirements. So basically anything and everything having to do with the PPP loan application, forgiveness application, and compliance, just eligibility, necessity, and that you stayed within, you followed the rules. Document it and keep that documentation. It must be kept for 6 years after the date the loan is either forgiven or repaid in full. And you must permit either the SBA representative or OIG access to those files upon request. So that kind of wraps that up of what we did. I kind of hesitated somewhere there towards the end because I had a thought of something I wanted to include, and what I'm trying to figure out, it was just going to be an example of what we're doing to tie out like a schedule, a little Excel schedule, how we're tying out payroll from a payroll register or a payroll journal, and how we're taking Excel and using it to then tie out to that number that's going to get reported on the form, because you want that, what they call a crosswalk. You got the form only asks for line 1, what's your payroll cost? And then you've got the supporting documentation, which is all the payroll reports, or the hopefully single payroll report, but it still has lots of numbers that you're going to include some and not all. You need a crosswalk that ties those two together, and I failed to include that, and I apologize. And I'm trying to think of a way I get that to you. So let me work on that and try to include something with the follow-up, and maybe it's a link to a document, and or I might even just record a second little follow-up 5-minute video and put a link to it to make sure you get it as well. But it was just to demonstrate the best way. I come from an audit. I never was an auditor. I was always on the internal provider side, but I would represent them during an audit. And so my job was to represent them with, my job was to justify everything they did to the auditor, right? So I come from that perspective. The cleaner it is, the easier you make it for the banker, the better your chances are of getting it forgiven quickly and easily without a lot of headache. And so that would be a nice little crosswalk for me to show you that example of. And I don't even have one put together, but Courtney has one and I've got it in my mind, but I don't have one that I can show you, or I'd pull it up. So I'll follow up with that in some kind of follow-up to everybody that's here. So again, we're here to help. We have worked really hard. I do have a small staff. There are currently 6 of us. We've got a 7th one we're trying to make an offer to, and we're desperately seeking another senior accountant position. If you have any friends looking for a cool place to work, we've been trying to hire for a couple months now. And so we're desperately trying to staff up because I know there are a lot of you that need help, and we're doing our best to give it to you, and that's why I do forget things and they fall out of my grand vision of what I wanted to present. You can go to our website. We don't currently have a click here to follow us, kind of like subscription to get all of our emails. If you want on my list, email me. I'll make sure I get you added, but we will be adding that just in the next few days. But we've got lots of info on our website. You can always reach out to me via email. You can call the office. I'm not generally available to take phone calls, and you'll be asked to email me. Email's the best way to get me directly. And then I don't have it on here, but again, follow us on YouTube because I do post everything up there, even little updates where one day I did a presentation on the HHS provider relief funds, and I missed a big update that had just happened like the day before. So after that presentation, I followed up the next day with a little 5-minute correction to what I had put out there. So anyways, we all thank you, us at Knight CPA Group, Healthcare Consulting, and DLA Piper for attending our webinar. Like I said, the next one coming up is this Thursday, so it's just in a couple of days. For registration info, you're going to want to go to the Healthcare Consulting website listed there at the bottom, or you can just go to hc-link.com, and they've got a big banner even on their homepage for the webinar series. You can register there. And then let's just go into questions. So Courtney's going to unmute herself. I'm going to move questions over here. We have quite a few. I do try to answer them quickly. It looks like Courtney's been answering a lot in the background that were probably just simple one-off questions. So let me just roll with it. Does the employee count at forgiveness exclude those that can be ignored, refuse to come back to work? Great question. I am going to say yes. Courtney, do you have a different answer on that?
No, I agree.
Okay, cool. All right, so we're going to say yes, exclude those that refuse to come back to work on that count, which means exclude them in the initial count, right? Do you exclude them you exclude them in the initial count of they were here when we applied. They probably weren't there on either end, right, Courtney?
Right. I would assume that you would exclude them from your initial count, being that they left
Even if
during.
they left during, yeah.
Right.
Okay. Okay. Can you give an example of partial forgiveness? You know, that is really, really hard with them now that they've extended the spending out. If you move back in time, when you had 8 weeks to spend, it was kind of a spend it or lose it. And if you didn't spend it in that 8 weeks, it was not going to be forgiven. And so we did have instance with a very large provider up in the New England area that had a large loan and they were provider services. For them to fully spend it within 8 weeks, even with accruing payroll and even with issuing hazard pay and hazard bonuses, they had a lot that they would have had to issue in bonuses just to get it forgiven. And we actually ran some tax analysis because that's going to be taxable income, right? Don't forget that part. Forgiven amount, it's going to be taxable income. For her to have issued all this pay and bonuses, it would have gone all to staff. She had already paid them what she thought was fair and, you know, taking care of the staff. She would have paid all this extra just to get it forgiven and then had to pay tax on it. So it didn't make any sense. So she was going to have an amount that was not forgiven. And therefore, what she was going to do was at the end of it, just pay it back. Like, okay, you gave me 2.5 million. I paid out 1.7 million. Here's the other 800,000 that I didn't spend. It's not forgiven, so I'm going to pay it back. So that is still an option. You can pay that back. But with this being opened up to where now it can cover your payroll for 24 weeks, you know, I don't know. The only thing I can think of would be if you're not a labor intensive business and you don't have enough payroll to pay, but you have a lot of rent and utilities and lease payments, you know, that not paying 60% of it on payroll, then some of it will be excluded from forgiveness. And then it becomes a 1% note for 2 years or maybe 5 years if it was issued after June 6th, June 5th. So that's that one. Okay, let me answer these live and dismiss. Okay, and then what if the majority of your staff work part-time and have a full-time job? They worked primarily at their full-time job, leaving your payroll with a reduced amount of hours. So you had a lot of part-time people. They had their full-time job, you know, somewhere else, and they primarily worked there and they didn't work for you on those part-time hours. The question there is, it's not who worked it, because if the employee left to go work somewhere else, then you would still have the hours that need to be worked by somebody, right? And so you're really counting head count, not Susie Q and John Smith. So it doesn't matter that John Smith quit working his hours if you filled it with somebody else. Now, if you could not fill it, then you're under that exception that you could not rehire. If those hours were not there to be worked, then you're looking at why were the hours not there to be worked? Were they not there because the clients didn't want the services? Then it was because you were shut down because of COVID. So that's where some of those exceptions come into play. We reduced the hours of some office staff. Once we received the PPP loan, we brought their hours back up. Would that make us eligible for the form? I think yes, right, Courtney? I would.
Yes.
I mean, that was the whole point of it. So yes, you are good to go. Is the second requirement of 2 and number 2 also at the 25% reduction? Let me go back to those. Let me see if I can understand this question. So the 25% rate reduction is on both the second option and the third option. And so that is true. So the second option and the third option, both, basically it's saying you did not reduce rates, salaries, or hourly rates. And you're
So so Bruce is asking about the second part of the second question.
Okay, thank you.
The borrower did not reduce the number of employees or the average paid hours of employees. He's saying, is that also the 25% ratio?
No, the 25% only applies to salaries and hourly rate, not hours worked. And so maybe this is what we're getting at. If you've got somebody that normally works 1,000 hours, and that's not a good example, normally works 40 hours a week, and their hours reduced, and therefore their pay reduced because their hours are down, that does not count on the salary reduction on the 25%. Am I answering that, Courtney?
Yes.
Okay. Let us know if we didn't answer that question. Eligibility requirement 3. Does the lack of available PPE at the beginning of the pandemic cover reduction in business? That is a great question, Craig. So Courtney, they couldn't send staff out because they didn't have proper PPE for the staff to go deliver services, but because of the pandemic, they're required to have PPE. I think I would argue it for you as yes, that would make you eligible under number 3 because of the restrictions and the guidance put in place, because it says requirements established or guidance issued. Guidance issued was wear your PPE. I think we could qualify you under that, Craig. Okay, I don't know, this comment said mine was over 3. Oh, over 3 million probably in
Yes.
PPP loan. Good job. I mean, I say that because that means you're servicing a lot of people and you were able to keep continuing services. Is shredding included in the utility payments? Great question. It's one of those, you could probably include it. It's going to be up to the bank on how detailed they get with that. You know, if you code it in your general ledger as shredding, as shredding as a utility, they may allow it. I'm not sure. We actually code that as outside services. 6 one way, half a dozen other. I would try it, see what the bank says. I can't imagine it's a huge expense. Same questions as above. Funding date of 6/1 and had a payroll on 6/1. Can that payroll be included in the alternative method? So alternative method takes into consideration the next pay period start date. So it's what is the pay period start date? So if your funding was on 6/1 and you had a pay date on 6/1, then I would just use 6/1 as your cover period. But if your pay period started on 6/1, then you would fall under the alternative cover period. But it's a moot point because 6/1 is your funding date. So it's just all a moot point. So I don't know what the question above was.
It was in the reference. So they were funded on, I don't know, say like 5/20, and their pay date was also 5/20. So could they include that payroll cycle in the PPP calculation? Sorry,
yes.
I already answered that one.
Okay.
Yeah.
Yeah, you can. And that's a good question. You know, I didn't even touch on it, is that exact example. If your funding date is 6/1 and you had a check date on 6/1, which had nothing to do with the covered period, like the pay period was for prior to your covered loan period, it still counts because it was paid in the period. So you get to pick up that early pay period. Then towards the end, you know, if you're coming up on your 24-week end date, you can accrue whatever's been incurred during the period. I don't know anybody running that far out, but if you had to, you could. So they're being very gracious with how much payroll you can pick up. What if you're a new business towards the end of 2019 and did not receive compensation in 2019? You are in a bad position and you're just not going to be able to claim any for the owner's compensation. So it's just going to have to all be employee wages because they would not have when you filed your application, if you had no wages in 2019, they didn't loan you any to cover you in 2020. So it's just going to cover your employees. If a mortgage for a business use is paid out of the company bank account but in the owner name, will that be forgiven? That is fairly common, and it's going to be, I think, up to the bank. And I think it's going to vary bank by bank. I really do. So you'll just have to get with your bank in that situation. With the $19.23 per week, will this be an average over the number of weeks used or the actual months? I think it's going to be by week, per week. Like, how many weeks did you actually use it? So if you went 3 months, was that 12 weeks or 13 weeks? So I think you're going to want to count per week, not month. Don't average it on a month. We pay our employees over that amount when we started as they were behind in payroll, but then graded downward as we went through the money. So what's going to matter here? It doesn't matter if somebody was paid more than that in a given week. It's going to be the total in aggregate. So if you paid them a lot in the earlier weeks and then it dropped down, they're going to want to say, you're going to want to say how many weeks. So say you went in 13 weeks. You're going to be allowed 13 weeks times 1923 is going to be 24,999. So you're just going to have to calculate that number and then apply it to each employee. And that's why when you run these reports, you want to run an aggregate report. My vision is you've got one aggregate report that shows employee by employee, their total amount paid for the whole 13-week, in this example, 13-week period, because they're wanting to check how many hours were paid, how many employees were paid, and, well, kind of that doesn't really count, but what was their total pay? And they're not going to want to go do that math. Now, you're certifying that nobody was paid over that, but for your documentation purposes, you're going to want to show that. And so in that case, you're going to know if you're 13 weeks or 12 weeks or 18 weeks, you're going to know what that max is, and you're going to look employee by employee to see if anybody went over it. All right. Can owner compensation be paid at any time during the 24 weeks? I believe so. I have not seen any guidance that says it's got to be paid over a certain number of weeks or weekly or monthly. And so I think even one lump sum pay would be okay. We haven't seen anything for it, but we haven't seen anything against it. We still have a lot of questions, so I'm going to kind of speed up. It's already 12:30. Can you please elaborate on employer contribution? If during that time you were able to do your 401k contribution due to reduction on salary, can you catch up for those times that were missed? Okay, question is, if during the time you were able to, I think she might have meant were not able to do your full 401k contribution due to a reduction on salary, can you catch up for those times that were missed? I think you're probably good doing catch up, but it's going to have to be paid during that period. Well, it says incurred or paid. But if it was incurred in prior periods, you didn't have PPP money yet, and then you use PPP money to catch you up, I think that would probably qualify. If I have enough payroll in the 8 weeks paid and incurred, should I just not add mortgage interest, all the others? I was going to put it all in just to ensure I have enough to, more than enough to cover. I would, it's totally up to you. If you don't mind pulling that documentation, then by all means include it. I totally understand wanting to make sure you include everything during the period to make sure, let's say that in your wages, you counted full wages and you didn't realize you had some emergency paid sick leave in there and you had $3,000 by accident of that included, and they want to subtract that out. Well, you've got all your other expenses included, so you're still over the amount loaned is eligible for forgiveness, so you're still good. I think that's fine. It's just a matter, do you want to pull all that documentation? Wouldn't the bank statements be net pay? Yes, it would. Okay, it says, wouldn't the bank statement show net pay, not gross payroll? That is absolutely true. But what they're wanting to see on the bank statements, they just want to see that payroll was drafted, that payroll was actually paid. And here's why. If you're good at QuickBooks, you could go recreate, and there are criminals out there and there are bad people out there and there are fraudulent people out there. You could go create all the payroll you wanted over an 8, 10, 12-week payroll, and you could produce all kinds of reports you wanted to justify all this payroll paid and it not really ever be paid through the bank. So they're wanting to see a bank statement that just shows, yes, you did pay payroll. I don't think they're even going to try to tie it out, although they might. They will on the big loans. And then that's, I think, also why if you have a payroll service provider, those reports are good enough without even having to bring in the bank statements the way I read it. Some banks are going way overboard on documentation. They're going to want payroll provider reports and bank statements. But that's why, you are correct, that will show net pay. Are they going to request payroll records and tax forms with a quarterly reports will not suffice in lieu of payroll records. Payroll records are going to show pay items in detail. They're going to make sure there's no items that shouldn't be included, such as mileage, which I know probably are not on your payroll tax forms, but also it's going to show and make sure that people over the highly compensated is excluded out. You're going to have to show payroll records, not just tax forms. That I know for sure. Is staffing company an eligible non-payroll is a staffing company an eligible non-payroll cost covered? No. So if you use a staffing company and that's how you pay your payroll, that is contract labor to you. That is not allowed. We did not even, I didn't even go through what's not allowed. Contract labor is not allowed, and here's why. Because the staffing company got their own PPP loan to pay those employees. You can't then include it as a cost on your PPP loan. If you choose option 3, do you still have to prove FTE counts if audited? I don't think so. I would be prepared for it. I would have the documentation for it regardless, because it does say that the documentation that you got to keep on hand does need to have all the FTE calculations. But I don't think you're going to have it for the bank. When is it possible that the full amount of the PPP loan will be forgiven, or just 60% of the loan of the amount and nothing else? When is it
So
possible?
they're referencing the loan application itself, the calculation that takes your payroll expense times the 60%. So I'll answer this one. The form itself is a little confusing, but yes, if you have spent more than 60% of your PPP funds on payroll, that is fine. Just the 60% is a minimum. And on the calculation, dividing that number by 60% is just proving that you have met that minimum requirement of that spending. So if you've spent 80% on payroll and 20% on other, or 100% on payroll, you can pick up just the payroll. You don't have to provide those other expenses.
Yes. Is it too late to elect the 8-week period? Frankly, I don't even know where you elect what period you're getting. The 8-week period has far surpassed for those eligible for it, because those loans, well, maybe not yet. Those loans would have been issued right up until June 5th. So August 5th, it's coming due. I mean, they're probably pretty much expired. It's 56 days after that. So we're right about that time frame. There is nowhere where there was a formal election to be made. So if you're done spending in 8 weeks, then just proceed on with your forgiveness application. Thank you. Remember, too much to keep up. Yeah, I know. Somebody said too much to keep up with. I was like, yes, it is. How do we get the handouts? I will put the handouts and some more information, including a link to the recording. You'll get those in a follow-up email. Can the final decide be appealed? Yeah, final decision can be appealed. Great question. If the bank declines your forgiveness, you can appeal to the SBA and have the SBA review it. I just don't see any, it's going to happen. I don't know why a bank would decline it unless, and Courtney's a great asset for many reasons, but one is she used to work for banks. And so Courtney, I could see a bank being ultra conservative if they're not happy with the documentation, because ultimately the bank is going to have to answer to the SBA. So the bank is going to end up getting audited saying, okay, you issued forgiveness on these, why? So the bank's going to have to justify why they approved the forgiveness. So I could see some trying to be a little conservative there. Don't you agree?
Yes.
Yeah. So, I mean, it depends on how, what we've seen. I think I could do a full webinar just about banking after this. There is a wide variety. Banks either hated this or they loved it, and everywhere in between. And we can see it on our end. The banks that just despised working, with anybody on this, and the ones that were like, and it was funny too, because there was a shift, because at first it was like, we do not want to do this. And then there was it's like, okay, we're going to have to do this. And then some were like, okay, well, not only we're going to have to do it for our existing clients, but there are a lot of people asking for it. Let's go get them too. And so there's been a big shift in banking. Okay, does the 60% apply to the 8-week program also? Yes, yes. So no matter what your spending period is, 8 weeks, 24 weeks, anything in between, it's still got to be 60% on payroll. If funds were received mid-April, can we use the 24-week time frame for payroll cost? Yes, to confirm, we would not have to use, yes. So if you want to use the full 24 weeks and just count and only count payroll, 100% payroll, we've got a lot of people doing that. It's taken 12, 13 weeks and they're going through their number just on payroll, or you can go all 24 weeks and spend nothing, include none of the rent or utilities. That's absolutely fine and easy. Please, what is the deadline to submit the loan forgiveness application? Great question. It is way, way far out there. It is 10 months after the end of your period. And so in this case, let's say you spent for 12 weeks and you're done spending, your official period is still 24 weeks. So once 24 weeks comes, then they're going to start expecting your forgiveness applications. You've got 10 months from the end of your 24-week period to apply for forgiveness. If you don't, then they're going to assume that you do not want forgiveness, and the loan payments will become due. Okay, so it's a long time out there. Can I explain the S Corp again? The only real thing that there was specific to S Corps is if you are an S Corp, an owner of an S Corp, then you are an owner employee as it's referred to in various places on what the cap was, the payment caps, the compensation caps. So you're going to be limited to either your 2019 compensation, 2.5 months worth, or $100,000 annualized 2.5 months, which is $20,833. That's what your compensation is going to be limited to. Does the payroll cost include only employees out with COVID and require PPE? No, this payroll cost includes all payroll. This does not have to be COVID specific payroll, administrative payroll, marketing payroll, everything, all payroll expense. Most of the care workers work only part-time because most clients do not have 40 hours. Will that affect the FTEs? No, it won't. You know, your FTE is going to be total service hours divided by service hours in that period. And so it will not affect it. That's very common. Does the payroll have to specify COVID on the pay stubs? No, again, this payroll does not have to be COVID specific. You guys are thinking about payroll for your provider relief fund, HHS stimulus payments. Those are completely different. Any and all gross wages. Can the PPP be used to pay up loans for payroll prior to COVID-19 since the company had lost beginning this year? If so, how do we document that? I think no, you're not going to be able to use the PPP loan funds to pay for loans for payroll prior to COVID because you already paid the payroll and now you're paying a loan to pay it back. I don't think that will be covered. Thanks for the insight. That's great, helpful and great, but there is a lot to consume, which makes it a bit confusing. I know, and my hope is that I went slow enough and tried to make it as simple enough as I could for you to digest it, and also work through it. Like get the form, download the form, start filling it out yourself, and just tackle it. You know, it's a big elephant, tackle it bite by bite. And then these webinars, they're not going anywhere. They don't expire. They're on YouTube. They're public. You can go find them and watch them. What will be the end date of my period since we received loan on 4/8? It depends on how long it takes you to spend that. You can go 24 weeks and you just got to count it out. I don't know that date right off the top of my head, but you'll just want to count that out or until it takes you to spend it. That answers all of our questions, y'all. We had 62 questions. That's a lot. And so I know there's a lot. I'm happy to do these again. I'd rather do them in mass like as a webinar like this so that we can answer lots of questions for everybody instead of just one-on-one because I just don't have the time and the capacity to do that. So if you feel like you need more, let us know and we'll do another one, you know. Also, if you're a TAC member, we will be at the TAC conference. We will have some live exhibit booth hours. I will be there live to answer these kind of questions. So feel free to pop into stuff like that if we're live on a platform and we can just answer questions. So you guys are welcome. Thank you for joining us. And again, I'll have some follow-up out to you in the next, it'll go out tomorrow afternoon with some follow-up information. Now is always the hard part. Me figuring out where I go to close out of the presentation. All right, thanks everybody. Bye-bye.